Billionaires get the best tax advice and have all the resources you would need and huge financial empires to protect. So it's no secret that they have the most clever tactics for decreasing their tax liability. But how do they do it? When we think of paying taxes, most of us think of income taxes. That's what we pay every April when we have to do our taxes and assess whether we owe extra money above what we've been paying on our payroll all year. When you think of income taxes, it's easy to see how billionaires may not be paying much. Famously, Elon Musk has not taken a salary at Tesla for years. Mark Zuckerberg's official salary at Meta is $1. Warren Buffett takes a salary of only $100,000. Of course, there are more highly compensated CEO billionaires. Jensen Huang of Nvidia has a base salary of $1.5 million. Apple's Tim Cook takes home $3 million a year. Sundar Pichai of Alphabet gets by on only $2 million a year. But here's the thing. Unlike the rest of us, none of these people are making their real money from their salary. Huang's salary represents only 3% of his yearly compensation. Tim Cook's salary is only 4% of his total compensation. How much would you be making if your salary represented less than 5% of how much you earned? On their salary, they also pay a little less as a percentage than the average person when it comes to social services taxes. Social Security tax is 6.2% of gross salary, but it caps out at $176,100. Anything above that is not subject to Social Security tax. Their base salary and any non-equity incentive plans are taxed like your salary, mostly. Compensation that comes in the form of equity, like stock grants or stock options, is different. Stock grants or options only pay tax when they get the awards, not when they are promised. Most equity compensation vests over time. What they are promised this year might be earned over the next 3 to 5 years. So how they are taxed is based on when they get the shares, not when they are promised the shares. They are also only taxed when the shares increase in value after they sell them. If they keep the shares forever, it doesn't matter how much they go up, they won't be taxed on that growth. This is how some of these executives can amass enormous fortunes without having to pay taxes on it. As long as they never sell the shares, that income is never realized. That's all relatively easy stuff to understand, but billionaires also have a complicated array of different shell companies and private companies through which they funnel and grow their wealth. This allows them to obscure asset ownership, shelter money in low-tax jurisdictions, defer taxes, and create paper losses, all of which can decrease their tax liability, even as their real wealth continues to go up. Many people believe that only salary and realized capital gains should be taxed. After all, taxing companies is done differently, even if the company is entirely owned by a single individual. Taxing business owners on the growth of their businesses, even if they don't take that value out of the company, can harm small and even medium-sized businesses. After all, taxing growth that isn't yet realized might make business owners sell their assets to account for paper wealth that isn't real. That business might have a lot of value, but that value isn't liquid. And in many cases, that paper wealth isn't even certain. Unlike public companies that have stock that is regularly bought and sold, private companies don't have a reliable way of assessing their value. How would you tax a small business owner on the growth of the value of their company? All of that makes sense, but starts to fall apart for the billionaire class. There are too many ways in which wealthy people can unlock the value of their assets without selling them or realizing them. One trick that the ultra-wealthy use is taking out loans. They can use their stocks as collateral to take out loans. They can use the loans to live, buy yachts, purchase French chateaus. Loans are not income and so are never taxed. So they can borrow against the wealth without ever paying taxes on it. In theory, billionaires can go their entire lives living in luxury without reporting a cent in income. In that case, based on income tax reporting, they're living below the poverty line. That makes a joke out of the very idea of income and income tax. So the traditional view of income falls apart for the top 1%. There is another way to calculate income though. It's called the Haig-Simons income measure, and it's meant to account for all forms of economic gain. It includes all of these forms of income. Haig-Simons is a comprehensive economic definition used to analyze a person's economic well-being. It includes the sum of their consumption and the change in their net worth over a given period. It focuses on measuring the increase in a person's economic power. Haig-Simons is a more comprehensive and probably more fair way of measuring a person's ability to pay a tax. But it's also very complicated. Maybe too complicated to implement easily in the real world. Because so much of a billionaire's income comes from sources other than just salary, it feels unnecessarily reductive to assume that salary is the same thing as income. Excluding most of the ways that wealthy people grow in wealth feels like a loophole that is pretty arbitrary. Another strategy that has been proposed is actually quite simple: a wealth tax. The idea is that anyone who has wealth over a certain amount would be charged a small percentage of their wealth every year. If they are wealthy enough, they would have to pay the wealth tax even if their wealth shrunk in the prior year. That would be tough, but most of the ultra-wealthy grow their wealth by more than 10% every year. A wealth tax sounds simple enough, but it could be hard to assess a billionaire's true wealth every year. And wouldn't billionaires just turn their attention to hiding or undervaluing their wealth? Trying to tax a billionaire is a little like playing whack-a-mole. So the question is, how much tax does a billionaire pay right now? A recent academic study analyzed the anonymized IRS records from the most wealthy top 400 Americans. These people are the true billionaires. They are not the top 1%. They're not even the top 0.1%. These are the top 0.0002%. The authors of this study attempted to use all the measures of income to assess how much tax billionaires actually pay in a given year. That means that they were counting any corporate tax their shell companies would pay, estate taxes, capital gains, salary, and anything else. Before I tell you the effective billionaire tax rate, I need to set the context. Using the same methodology, we find that overall average tax rate for the US population is 30.2%. The top labor income earners, or top people who earn the bulk of their income through salary and wages, think of doctors, lawyers, upper management in large corporation, people like these folks have an overall tax rate of 45%. So where do the billionaires sit? Their tax rate is 23.8%. But apparently not all billionaires are created equal. The wealthiest billionaires in the United States, or the top 0.00005% in society, pay only 22% in overall taxes. It probably doesn't come as much of a surprise that the wealthy have figured out how to game the system so that they pay a lower percentage of their income than the rest of us. But it might come as a bit of a surprise to learn that as recently as 2017, their overall tax rate was 30%. That's still pretty low, but it was in line with the overall US average, even if it was still significantly lower than the top wage earners. Within the last decade, the billionaire's tax rate has dropped by 20%. It's nice to see that they're avoiding the inflation pinch. The billionaires are effective at getting out of paying taxes. What do you think? Should billionaires pay more in taxes than they do right now? Are there any strategies that billionaires use that you think the rest of us should be using? Leave a comment and let us know what you think. As always, please like and subscribe. It helps us out and we appreciate it. Thanks for watching.